Hey everyone, Chris Johnson from Monday Morning talking 3 stocks to watch here on a Thursday afternoon after the market close. I've got 3 of them, 2 of them earnings calls with Salesforce.com and what happened last night and how it affected the stock today. Second is Dell, who just dropped their earnings results this afternoon. Stock's trading down more than 14%. Is it a buy right now? I'm going to answer the question for you. And then we're going to look at a company called Nano Nuclear Energy, ticker symbol NNE. New to the scene here, they just IPO'd recently, trading under $10 for those of you looking for stocks under $10. It's up more than 100% this week. Should you be buying it right now, or should you be doing what I do? I actually bought the shares a couple of days ago, so I'll share that with you. Let's jump into it right now. All right, so as I said, I've got 2 earnings calls. We're going to look at Salesforce.com. The chart, stock's down more than 20% today. Should you be buying it today? There's a dead cat bounce in its future. We'll see what that's going to hold for you. And I'm going to look at Dell. Their results just came off the presses earlier, let's call it about an hour or so ago. The stock is down 14%. Is it a buy? I'm going to answer that as well. Full disclosure, I have positions in both of those companies for a long-term perspective. And then Nano Nuclear Energy, ticker symbol NNE. I'm going to go through that, and it's beyond a little bit of a speculative call. I want you to look at a stock under $10 and a little bit of a hint on how it's going to trade. First, let's hit the market just from 10,000 feet right now, because we're kind of at a critical point. And it has something to do with what Salesforce.com said earlier, or actually last night after the close. So here you've got the S&P 500 ETF, the spider shares as they're called. And a couple of lines I want you to look at. Remember, we've got an inflation gauge. The PCE is coming out on Friday morning. This is the Fed's favorite thing to look at in terms of inflation or gauging inflation. CPI and PPI were mixed a couple weeks ago. This is going to be the thing that is going to cause the Fed to start indicating what they're going to do with rates. And obviously the market is bracing itself for maybe rate cuts coming later in 2024 than everybody expected. But what's important right now is that red line, that's a 20-day moving average. It's what I refer to as a trader's trend line. When you look at that, a break below that usually accelerates selling pressure. You'll see stocks, and you saw it. This break here, we see volume start to go higher, and then a break below that green line, which is a 50-day, and even more volume starts to come in. It's the technicals that push the market around. I always talk about headlines and how they can have a little bit of an effect here over a 2-3 day period or so, especially on stocks. But the technicals and prices never lie in terms of trends, and that's why you need to be watching these charts. So here's what I'm watching when we go into tomorrow, that S&P 500, the NASDAQ 100, all of those broader indices. If we see a PCE that comes in a little hotter than expected, so inflation is still a little more resilient than the Fed wants, you're going to see some of this pressure or that buying pressure come out of the market. In other words, those all-time highs that we just recently saw earlier this week are going to start causing people to start selling some of these stocks. So keep that in mind as we move into Friday. Anything from that PCE is going to act as a trigger. And I mentioned Salesforce.com and how they may have something to do with the broader market moves. Let's look at the stock and let's talk about the earnings real quickly. So Salesforce, in case you missed it yesterday, they came out and they didn't give a terrible earnings report. When you look back at the last quarter, they beat analyst expectations for the earnings per share. So that bottom line number, that one thing that everybody says, hey, did they beat? Well, they beat by a penny or they beat by 2 pennies. They beat our analyst expectations. They actually beat them pretty well when you look at that bottom line number, $2.44. They beat by 6 cents, right? When we look at what else was in that report? Right now, it's all about revenue. Companies are focusing on revenue and trying to grow that revenue. We've seen a lot of companies through 2022 into 2023 doing a lot of cost-cutting measures. Meta is probably the one most famous for doing that and really cutting the fat out and turning themselves more profitable. Well, what you're going to find is that a lot of people are now looking at revenue because that is a source of what's coming in to get to that bottom line. And in Salesforce.com's case, they missed their revenue target this quarter. That's not why the stock came down, because they only missed by $13 million. And that's on $9 billion in revenue. So the revenue missed last night wasn't what affected the stock. It was more about what management said. And that's where you can extrapolate it out to the market. And allow me to do that for a second. Management from Salesforce.com came out and told us that, hey, it's taken us a little bit longer to close these deals. The decision makers, the capital expenditure decision makers are taking more time and they're paring back a little bit of what they're spending. Takes me back to 2002, somewhere around there. I got the opportunity to sit at a round table that Steve Forbes was presenting at. And he actually said something that stuck with me to this day, and that is when the CFOs of companies start to take over the reins of the companies and the CEOs kind of sit in the passenger seat, that's the time to be wary of stocks or the market, the economy more in general. Because what's happening is the people who are writing the checks, who control the purse strings, are actually trying to brace the company for some rough waters, batten down the hatches, let's say. So the visionaries of the companies, the CEOs, kind of have to step by the side for a second and let the CFOs manage the numbers. Now, Salesforce's comments last night about taking longer for these decisions to be made and maybe seeing less spending in the future here, if those truly hold out for the rest of the market, or at least a lot of these service industries, that kind of tells you that a lot of these companies are cutting back on capital expenditure, and that's going to be something that'll start to spook the market. We've heard warnings from the Fed, Janet Yellen, about how they want to continue to watch capital expenditure grow. That is what's going to continue to drive the market higher. Salesforce.com, let's go back to this. And ServiceNow, I'll look at that chart for just a second. They didn't announce earnings today, but just Salesforce.com's earnings announcement and their outlook. So that outlook that kind of brought the expectations down for next quarter. That's what caused the stock to pull back 20% here for Salesforce, about 12% for ServiceNow. Both of them same in that same service industry area. Both of them heavy in the AI market right now and trying to bring AI into the service industry. So watch this very closely over the next couple of weeks. But a lot of people asking, hey, Salesforce, after this pullback, is it a buy? This is why it's a stock to watch right now. So the daily chart is telling you that you want to kind of stay away from this. You've got a lot of volume that have traded off today as it traded more than 20% lower. Worst day in 20 years for Salesforce.com. You notice that huge bar of volume right there as well. That's good because you get a lot of that selling out very quickly, but the chart right now is telling me from a long-term perspective, you got to let this play out. Don't jump in and try to catch the falling knife is what I'm saying. And I've got all kinds of analogies for these. But when you look at the technicals, remember I said that the prices don't lie. The trends don't lie. When you go out and look at a monthly chart of Salesforce.com, this is what you need to watch at this point. That red line is your 20-month moving average. Now, for those that haven't heard it, the 20-month moving average can be a technical indicator in terms of a long-term bull or bear market trend. So when a stock is above its 20-month moving average, it's considered in a long-term bull market. When it moves below, it's considered in a long-term bear market. So you can expect stocks to go with that trend. It's not a shocker to see the stock actually pull back to that $215 level today. There's nothing special about that except that the stock's 20-month moving average is sitting there. That is that line of demarcation. The last time we broke through it, January of 2022, and the stock went on a 45% decline over the next year. We're obviously wrestling with a bear market at that point, so you had a lot of headwinds for Salesforce.com at the time. But nonetheless, if we break below that technical support, you've got another level that's going to come into play, and that's at 200. And you can see the stock has kind of ran into resistance here, ran into some support. You bounced around before ultimately breaking down to that bottom. Resistance here, and then support there. So from a round number perspective, $200 is the price that I start to look and say I'd like to nibble at Salesforce if it breaks through that 20-month moving average. And from there, I play it by the numbers. $150 is the next level that I look at as long-term support for the company. And I'd start buying it because the company did come out and say they expect 2025 to be good in terms of revenue, and they're actually starting to edge those expectations a little bit higher. So from Salesforce.com, the comments from management kind of suggest that the next couple of quarters are the test for the company. That's the reason I don't go in and buy it at $215 right now. Let that long-term support play out. So let me summarize that. it's not you don't want to try to catch the falling knife here over the next couple of days. If you have bought into the shares, consider a dollar cost average approach with the stock like this. You buy a little at 215, buy a little more at 200, buy a little at 150, and you lower your average cost of the stock for a long-term hold. All right, so that's your Salesforce.com. Right now, I'm just watching to see if that long-term support holds. Let's take a look at Dell. That's the other reporter here. And Dell came out after the close. You can see the stock's trading down almost 20%. Right there it is after hours. Two stories here driving Dell. Dell on long-term position right now, as I mentioned or disclosed. I am a long-term buyer or holder of Dell. I do have the shares right now, and I'm looking to buy more, and I think this is going to be an opportunity to do that. With the stock down 20%, you look at what the earnings were for Dell, and they actually matched expectations in terms of that earnings per share. Revenue was better than expectation. Comments from management were bullish. So in other words, they came out and said, hey, we're catching up with the AI business very quickly. Their backlog grew by 30%. Their deliveries were up by more than 100%. And revenue from that AI server or the AI-centric servers is increasing sequentially. So from the perspective of the fundamentals, it looks good for Dell. Companies also kind of giving us a little bit of that Salesforce.com. Looking at their guidance for the next quarter, they actually took it below what Wall Street expected. So their management is saying next quarter on earnings per share, that bottom line number, that is going to be a little bit lower than what the market expects. That's why you're seeing 20% to the downside. There's another reason I'll get to in a second. They also took the revenue guidance above what Wall Street expects. So you're seeing a little bit of a mixed outlook here. Earnings per share is going to be below, but revenue is going to be higher. What's that mean? Well, that means that they're actually investing more money into their company so they can continue to grow. 30% backlogs that continue to get higher. You got to catch up with that, and that means capital expenditure. And that's going to lower your margins, bring the money down because you're spending more on your business. But over the long haul, that's going to pay off on this business. That's why I look at it as a long-term hold right now. But with all of this mixed in and you put it all together, the outlook for earnings next quarter being lower, revenue being higher, what do you expect to see here from Dell? Well, it comes down to this phenomenon, and it's not really a phenomenon. You've probably heard of it. But what we just saw from Dell was an incredible buy the rumor rally leading up into this earnings announcement. So stock was trading down around $130, and you can see it bounced up against that level 3 times here since April and found resistance. Then once we broke through, we ran up to 150. Last week, you had comments coming from NVIDIA that were bullish on Dell. In other words, NVIDIA is saying, hey, this is one of those companies that we're starting to do business with or we're doing heavy business with. That is not bad in any situation. So you get this incredible rally from $140 up to $180 right ahead of earnings. That is your buy the rumor. Everybody's expectations went through the roof. And unless you crush the results, you're going to see people selling the news. And that's the other side of that trade, is the sell the news trade. We're seeing 20% after hours. Where do I buy the stock as a long-term investor? I look down at that 130 that I already mentioned. Notice that top that you had, and just like that monthly chart that we looked at for Salesforce, those levels turn from support to resistance and vice versa. We saw resistance here. Now you're going to see the market act with some support at $130. That's where I draw the line, add to my position. Another benefit here is that 50-day moving average, which is moving higher. The trend is your friend right now on Dell, and it happens to combine perfectly with that $130 level. That's where I'm looking to add to a Dell position. Third stock that we covered today, NNE. And this is a fun stock to watch, but I'm going to warn everybody that as you look at this, obviously trading with some volatility and under $10 here, keep that in mind. Highly speculative. So what are they? They are a new company, just IPO'd to raise some capital here. You can see it was just a couple weeks ago. Stocks traded right at that $4 level, bounced around. Full disclosure, 2 days ago, I bought shares because I started to see some headlines and I saw volume that was interesting, and that's the driver here behind this trade. But in this particular case, with it sitting, right at that $9.50 level or so, and you see the stocks trading down to $1.71 today, up 26% for the day. Notice this, though, please, the volume. Couple of things. Whenever you have a new stock that comes to market, very speculative. Keep in mind, this business does not have a product out there, is not generating revenue, and does not have an earnings per share to do some comparisons on. So you are investing in an idea. Now, the idea here is that we're going to have these compact nuclear plants. That is a great idea because it comes down to some clean energy options that were not on the table as of right now. Other companies are in the space. Rolls-Royce, you've heard of them. Westinghouse, you've heard of them. They're developing the same type of technology right now. So in Nano Nuclear's case, you've got speculative interest driving the stock. That's why I always point at that volume measure that I just pointed out. Look at the volume that came in. First interest in the stock, kind of like Reddit when it IPO'd. Everybody's jumping in, or there's a large, relative to the company, group of people jumping in. Nothing compared to Reddit. And then you see what I call a volume vacuum. It takes the stock down from that $6 level to $4, right where it IPO'd, and it trails off. And then you get that break up above 4. When it broke up above 5 the second time, that's when I entered with a small position. And a lot of people did. Look at the volume that happened here. But one thing that's very fun to watch and curious, has to do with the psychology of prices again, is that the stock, when it runs into right around that $10 level, you're going to see it start to trail off. It's not a sell the news, but it's a sell the profit. If you bought something at $4 or $5 and it's booking 100% profit for you, sometimes you take it off of the table and you walk away. It's my plan. I still hold the position I opened earlier this week. But in this case, if we see it hit that $10, and maybe it doesn't even do that tomorrow, I'm going to be exiting the position and looking for it to move lower. So do you buy the shares now? I'd have to say it's a bold no. I don't buy these shares. First of all, the only thing that's driving it is speculative interest, and that usually dies off very quickly. Where do I start to look at it and consider it? Well, first of all, I'd love to see them come out with obviously some earnings in a quarter here and tell us what they're doing with their money as they start to develop towards the goal of having products out there. 2030, this is going to be a business that is going to be booming. Not necessarily nano, but it's going to be that small nuclear power plant industry is going to be growing at that point. Will they be there is the question. And when you're up against companies that have much larger checkbooks and better development pipelines, the answer is usually going to lean towards a no by default. So if I'm looking at it from a short-term perspective, I start to eye that $5. That was a trigger point, and you're going to find that the traders that were buying it at $5 and $4 are going to get back in. From there, that support leads up to another $10. And if it breaks out at $10, you'll see more interest come in the stocks. Institutions can generally start to get interested or buy a stock that's above $10. You'll find that a lot of institutions are limited. And with this short amount of time, that's even going to be more limiting. But for the speculative traders out there that are going to be watching what happens, you're going to watch that volume for those volume flows. Right now, this volume is going to lead to a drop, which I call a volume vacuum, pulls the stock down. We check it out again at that $4 or $5 level. And if you're speculatively trading these, then maybe you take a position. Otherwise, it's a company that you wait to develop over the long run. So there you got it. 3 stocks that we talked about real quickly. I'll summarize them for you. Salesforce.com. I look at this stock and what it's been through today. $215 price level is right where that 20-month moving average is. That's going to be the test here, and it's going to take weeks to test, not days. $200 is your next level. It's going to be round number support for the stock. You should see buyers step in and start accumulating the shares there. Wall Street is still behind this stock. One analyst came out today and reiterated their bullish target, which was above $300. You're not seeing any sells. And the company's telling us the silver lining is that their outlook right now for fiscal year 2025 is still bullish. So from that perspective, I look at the stock as a long-term play at $200. And then, as I said, I start to dollar cost average and look at adding to my position as the stock pulls back for hope. And I don't trade on hope, but that outlook that takes us back up above this 220 level and towards a $300 level on Salesforce. Dell, it's a little bit faster trade here, and I don't think you have to wait for it to play out. I think you look at that $130 level that we talked about on Dell. That's that mark that it was trying to break through. And in the case that we pull back to that, you're going to see a lot of people buy it, not only because of the 50-day moving average, but that resistance that we saw in April and May. And then the last one, Nano Nuclear Energy. I can't believe I'm talking about a stock that's only been around a few weeks. Watch this one. This one is very hot, probably too hot for most of you to handle. The $10 level is going to be some resistance here. You'll see people closing out, taking some profits off the table. And I start to watch it at $4. Let this company start to prove itself and their idea before you even start to look at it for a 3 to 5 year outlook. It is a speculative trade now only, but it's grabbing headlines, and that's why we're talking about it here today. Make sure you check in with moneymorning.com tomorrow. We're going to be talking about the PCE report, as well as a couple of the stocks that I'm talking about in my fast profit trades. I'll get some restaurant companies, some ideas that came from my walk down Main Street. I'm going to be putting another one of those up tomorrow on moneymorning.com. Until the next time, I wish you the best trading success. Make sure you like and subscribe to get more trade ideas just like this. Have a great night.